Your credit score affects almost everything. Loan approvals, interest rates, even renting an apartment. But most people are making mistakes with their credit that they don't even realize are mistakes. Let's go through 7 of them, one by one. Mistake number 1. Thinking a single missed payment doesn't matter much. Payment history makes up about 35% of your credit score, the single biggest factor. Even one payment that's 30 days late can drop your score significantly, and it can stay on your report for up to 7 years. The fix is simple but non-negotiable. Set up automatic minimum payments on every single account, so a forgotten due date never becomes a lasting problem. Mistake number 2. Maxing out a credit card, even if you pay it off every month. This comes down to something called credit utilization, how much of your available credit you're actually using. If you have a $1,000 limit and you're carrying a $900 balance when your statement closes, that's 90% utilization, and it hurts your score even if you pay in full afterward. The fix: try to keep your balance under 30% of your limit at all times, and under 10% if you want to optimize further. Paying your card multiple times a month instead of once keeps this number low automatically. Mistake number 3. Closing your oldest credit card. It feels like good housekeeping. You don't use the card, so why keep it open? But the length of your credit history matters, and closing your oldest account can shorten your average account age overnight, which can lower your score. The fix: keep old accounts open, even if you rarely use them. If there's an annual fee you don't want to pay, call and ask about downgrading to a no-fee version instead of closing it entirely. Mistake number 4. Applying for several new credit cards or loans in a short period. Each application creates what's called a hard inquiry, and too many in a short window signals risk to lenders, even if your intentions were harmless, like comparing offers before a big purchase. The fix: space out credit applications by at least a few months when possible, and only apply for credit you actually plan to use. Mistake number 5. Never checking your credit report for errors. Mistakes happen more often than people expect. An account that isn't yours, a payment marked late that was actually on time, a balance reported incorrectly. These errors can drag your score down without you ever knowing why. The fix: pull your free credit report at least once a year, review it line by line, and formally dispute anything that looks wrong. Corrections can improve your score without you changing a single spending habit. Mistake number 6. Co-signing a loan without understanding the risk. When you co-sign, that debt shows up on your credit report as if it were yours. If the other person misses a payment, your score takes the hit too, even though you never spent the money. The fix isn't necessarily to never co-sign. It's to fully understand that you are equally responsible for that debt in the eyes of every lender, and to only do it for someone whose payment history you trust with your own name. Mistake number 7. Ignoring your credit score until you need it. Most people only check their credit when they're about to apply for a mortgage or a car loan, at which point there's very little time left to fix any damage. The fix: check your score regularly, even when you don't need credit right now. Many banking apps offer this for free. Treating your score as an ongoing habit rather than a last-minute checkup gives you months or years to fix small issues before they become expensive ones. Here's the bigger pattern behind all 7 mistakes. None of them are about how much money you make. They're about consistency, paying on time, keeping balances low, and paying attention before a problem becomes urgent. Anyone, regardless of income, can build excellent credit simply by avoiding these 7 habits. If this helped, subscribe. Every week, one simple money lesson. No jargon, no hype, just what actually works. I